Alrighty guys, welcome back to the live stream. Hope you guys are all having a great and amazing day today. And boy, guys, do we have some news today. The stock market today has absolutely got annihilated. So we're going to be talking about things you can do, what's going on. And obviously, if you guys have any questions, concerns, make sure you guys join the chat, join in on the conversation, ask questions. So let's just kind of dive into this. I'm sending it to the team here on YouTube, so we are all ready to rock and roll. Alrighty, so we are up and loaded here, ready to rock and roll. So as of today, the Dow Jones, the Nasdaq, the S&P have absolutely gotten annihilated today. Looking here in the market, you guys will see the S&P 500 map is not very good. We're seeing tech down, an average of about 2%. Oracle down 6%, Microsoft 1.4%. We're seeing Tesla, Amazon, we're seeing so many companies just get absolutely obliterated, selling off more than 2% in a single day, which is an absolute crazy move. So what on earth is going on? Well, as of today, the Dow Jones closes nearly 300 points lower after the 10-year treasury yield tops 5% for the first time since 2007. So right before that 2008 crash, this is kind of how the yields were looking. Now, what does this mean for investors? Well, honestly, really simple. So higher bond yields could mean bad news for stocks. Bonds compete with stocks for investors, dollars, and when yields go up, equities often go down. So anytime we have bonds go up, we will see stocks go down. It's this kind of like inverse correlation, which is crazy. So you guys can see as of today, we've seen this absolute crazy move. Now looking at it here on the technical side, so not the fundamentals and all that stuff, you guys will know that this red line, we have this tendency of seeing this stock or ETF SPY, which is just the S&P 500. We have a tendency to see it used as some support. So you guys will see it curl down and hit it before, and we did get buying pressure right near and around there. Now, this wasn't during the news. This wasn't during, all this crazy stuff. So obviously, we got a little rebound. It rebounded up to that 90 moving average line, and now we're seeing more sell-off. So looking at the chart here, right now we are on this downward trend, this short-term downward trend. Now, does that mean we're going to continue to sell off? Well, that's not necessarily true, but I do think we are possibly due for a correction. Not a stock market crash, but a possible correction. A stock market correction is different than a crash because a crash is when the stock market sells off more than 20%. A correction, on the other hand, is when it sells off about 10%. Now, the difference between the two is, crashes happen every 3 to 6 years. Corrections on average happen every year to year and a half. So yes, we are due for a 10% little sell-off. Now, does that mean the S&P is going to get annihilated down to $300? No. What this means is just these stocks that are, in my opinion, pretty overvalued, we're going to see them start dwindling down. We're going to see a lot of AI companies, tech stocks start selling off just because over the past year, they've seen so much buying pressure. Whoa, I knocked over my phone. Even looking at a company, like NVIDIA, NVDA is up over 200%. Now, yes, the company is beating expectations, doing great things. But on the flip side, this stock, anytime a stock goes up 200%, you're going to have sell-off. It's not like the revenue's up 200% or the profit margin's up 200%. And yes, they're all up quite a bit. But with that being said, it just doesn't justify the price. And anytime we have stuff like this happen, we will get sell-off in that certain sector. We saw it very similar situation with the electric auto space, where everybody was buying Tesla, they were buying Plug Power, they were buying Nikola Motors, all of these, I believe that's how you say it, all of these companies. And then what happened? The market did a little reset, and all of those stocks just started selling off. In my opinion, they were 100% due for it. And what we kind of saw was the leaders start emerging. Companies like Tesla starting to move their way in, taking up more market share. And I do think that's kind of what we're going to see with technology. I do think we will see a good sell-off from it. Now, it's not going to be forever, but what it's going to do is it's going to make all these small companies, these risky companies, honestly, kind of get what they deserve, in my opinion. Stocks that are up 200-300% for no good reason. Like if we look at AI, like C3 AI, we've seen a great amount of buying pressure. The stock went from $10 all the way up to $48, and then just recently started selling off. We're seeing a variety of companies falling into this. So that's kind of what I think's going on and what's going to happen to the market. Now, what should you do as investors? Well, there's a couple of things you guys can do. The first thing is nothing. If you're investing in the companies you believe and ETFs you believe in, just continue to invest in them. That's what I would recommend doing. And the reason why is because look at this. Over the past 90 years, through all the ups, through all the downs, the S&P 500 has had an average return of about 10%. So if we zoom out, yes. Yeah, if we zoom in, it looks pretty risky, with the volatility, the massive amount of sell-off here we've gotten. But as we zoom out, for me as a more of a long-term investor, I think this represents a great opportunity to buy these companies as they sell off at just a more affordable price. Looking at the yearly, you guys will absolutely see the growth here. Beautiful growth all the way since 1991. We've seen fantastic amount of buying pressure. So I do think we could possibly see a little correction, just because look at the amount of buying pressure we have seen with a little dip in here. So I do think we'll probably see a little dwindle down. That doesn't mean the all stocks are bad or there's no way to make money from it. I just think it all comes down to time frame. If you're looking to invest for the long run, don't change anything. If you're looking to trade or try to get in and out of positions, then you should be little more aware of your surroundings before you guys go heavy into a lot of things. So another thing here, let's go ahead and we can actually look at the S&P 500 map, and we'll go to the home screen on Finvest here so we can see, we're seeing the stock here, SEDG, get sold off 27%. So let's pull that up here and see what's going on with this one. And guys, if you guys want me to look at any stocks, let me know. So look, a stock that was once trading for over $380 has sold off down to $82. And they did release an earnings. They didn't do very good, obviously. You guys can see they announced it, and the stock just absolutely got obliterated here. And on the news side here, let's see what we can see. So obviously we had the treasury, the yields being a major issue. I want to know what's going on with this. It does look like we did get a decent amount of revenue dropping here. Obviously that will cause sell-off in this position in the stock here, but let's go ahead and we'll just throw this in on Google here and see what's going on here. So, all right. So, solar stocks stumble to 3-year low as solar drops nearly 30% on demand warning. So that's not good. Solar stocks tumbled Friday. Manufacturer demanded in Europe has significantly weakened. Well, obviously, anytime you guys have that announcement, you're going to have sell-off, and that's kind of what we have seen. So we want to look at AIM here. AIM. All right, so AIM here, this stock is less than $1. So obviously, a stock under $1 is going to be a little more volatile, a little more risky. But looking at it here on the short term, it does look like we do have some support rate pretty much right here at about 40, we'll call that 42 cents. And the reason why, every time it hits that, we just get natural buying pressure at this stock or at that price point. So it came in contact once, twice, 3 times, 4 times, almost 5 times in here. So it's right now trading at 45. So looking at it here, does look like recently it's using some of the moving average lines as some support. So for a possible trade, at least what we can break down is so if you hop in, you set your stop loss that just go below this support. So we're wrong on the trade, we'll set it below this. We'll set it here at 49 cents. So we're risking 6 cents. See this stock make about 10 cents. So we're risking 6 cents to possibly see the stock go up to 55 cents. So risking 6 cents to make 10 cents, which is almost the 2-to-1 risk and reward. So for a swing trade, what I would do most likely, if you're looking to hop in at this price right now, I would move my stop up, just because you always want to trade, 2-to-1 or 3-to-1, meaning I'm risking a penny to make 3 pennies, risking $1 to make $3. So in this circumstance, you're going to be risking about 6 cents to make 10 cents. So it's almost 2-to-1. But as far as like a long-term investment, what I always do is zoom out and kind of see where the stock has gone. So yes, we've seen a ton of volatility. The stock has gone all the way in the past from very similar pricing, actually, at 38 cents all the way up to almost $7 a share all the way back in 2020. Sold off, consolidated, found some decent support near $1.80, consolidated there for a while, and then recently, probably after this sort of earnings, started selling off here and pretty much hasn't recovered ever since. I'm just kind of looking at this. Yeah, so that's what I would do is I would either move my stop up and just be a little more tight with it and try to maybe, I don't know, because we are possibly getting this to come back down. So for me, I probably would hold off until it's like 42 cents, and then you could set your stops at 39. So now you're risking, 38. So now you're risking 4 cents to possibly make 10, which is just a little better risk and reward. Just because if you hop in now, it could continue to sell off, and then you could try to buy in closer to that support here. All right, Rivian, let's pull that one up. Rivian here, in my opinion, it's a stock that is volatile, but I do own shares of it. I do not saying that it's a perfect stock. I'm not saying that at all. But Rivian here, it's just an EV play. We had that old resistance. We had this nice resistant breakout here. Right here, you guys will see it broke out of that resistance and pretty much was full steam ahead from about $15 all the way to about $28. And then you guys will see it announced that earnings, sold off, found some support here on this 90 moving average line. So it hit it once, we got that great buying pressure, hit it twice, great buying pressure, broke through it, and then kind of has been stumbling down. So looking at it, what I would try to get, the perfect price that I would want would probably be $15.69. And that's just right on that old resistance. Hopefully it would use that old resistance as possible new support. That would be like some sort of trade. But as far as like a long-term investment, Rivian, it's a growth stock. It's in the electric auto space. They're going to have struggles. They're going to have volatility. But, I do have it. It's under 1% of my portfolio. So it's not like something super crazy. But it's worth having shares. That's the way I think of it. I think their cars are cool. And then looking at it on like the revenue here, we'll pop that out so we can see. So you guys will see the vehicle deliveries, great growth. The revenues here, the EPS revenues are up, which is good. And you guys will see right here, the total revenue from 2021 to 2022 at least has went up 2,914%. The balance sheet has, well, what we've seen pretty much off this, the assets go up. We've seen liabilities roughly go up a little, but compared to the revenue, it looks pretty solid. Cash flow, we've seen a little decrease in that. So, it's just a growth play 100%. It's not like something I'm saying, oh, this thing's going to go up to $100. This thing could easily go to $10, but it also could go up to like $40 again. It's just super risky. And I do have shares, but swing trading, looking near and around 15.56, we'll call it. Setting stops probably under 15, so risking 50 cents to possibly see this thing squeeze up to $20 or $21. That would be like my kind of swing trade on this one. But you guys can see the volatility where we had they released it in a great spot during the hype of EV, and that's kind of what we were talking about earlier, where everybody was investing into the electric auto space, and it's not like it didn't do well. Within the first 1, 2, 3, 4 days, the stock went from $100 to $179 in 4 days. That's the amount of buying pressure we had. What broker do you use for swing trading? So for me, I like Moomoo. That's the one I have up. But honestly, all brokers are good, especially nowadays. I recommend Moomoo, which is the one, like I said, I'm using, but also, TD Ameritrade's really well, or really good. Even Robinhood, you can make good swing trades. It all comes down to, honestly, your strategy, your mindset. And we do have a course coming soon. I was hoping to get it done today, but man, guys, it's going to be great. We're going to have chat rooms. We're going to have, working on your mindset. We're going to have so much fun things in it. And it's all lectures. We're going to have private live streams. So it's going to be great. I'm super excited about that. So stay tuned for that. We're going to be doing giveaways and all that stuff. But yeah, so, I appreciate all of you guys coming in, and hanging out with me, especially this late where I'm at. It's almost 1 a.m. So, I still got so much stuff to do because I'm working on my course. I still got to film a long video for you guys, but I appreciate it. I appreciate you guys stopping in, hanging out with me for a little bit. If you guys are new to the channel, subscribe, like, and we'll see you guys tomorrow in the next one. So if you guys have any last questions, go ahead and ask them right now. But it's been a good one, guys. So we'll see you guys later. Hope you guys have a great rest of your night, and we'll see you guys tomorrow. Take care.